Hi, this is Hank with Amada Senior Care Hoboken. Today we have a very special guest, Christine Travis. She's with SPG Life Annuity. She is a life insurance and long-term care insurance planner. She's going to share with us a very special story about her mother and how she planned for her long-term care, and eventually she executed on that plan. Christine, thank you for joining us today. Would you like to tell us a little bit about your background?
Sure. I started in the business 23 years ago as a securities licensed retail financial advisor, and I segued into becoming a product wholesaler for a very large insurance company, and I specialized in life insurance and long-term care planning. I worked in all the major financial institutions and independent broker dealers, and now I work for an agency that represents all insurance carriers.
So can you tell us why it's so important to plan ahead for long-term care?
Absolutely. Oftentimes when there's an event and a loved one requires care, it's usually an 11th hour crisis. So the family is scrambling to put resources in place. It's a lot easier to do if you actually have planned ahead of time. It makes it a lot easier for the loved one who's in need of care, as well as the rest of the family members and anyone involved.
And can you let us know what happened with your mother that led her to needing care?
Yes, my mother slipped and missed a step in front of the dentist's office, and she fell and fractured her hip and cracked her femur, so she required surgery.
And what was her condition post-surgery?
Post-surgery, she was incapacitated, very much so, for at least a couple weeks after.
Could she bathe herself, go to the bathroom, dress herself, any of that?
Unfortunately, no. She was bedridden, and once she was released from the hospital, she had to move to a rehab facility.
Got it. And does your mother live alone?
She does. She's lived alone a very long time. She's been in her current home for almost 30 years.
And how long did she actually need care post-surgery?
In the facility, that was about a few weeks, but then she needed ongoing care in the home to remain independent.
And when she went home, what was the home care schedule like, and how did the caregivers assist?
So when she was released from the rehab facility and went back to her home, she did have some of the skilled medical care that was triggered by her event in the hospital. So she had 100 days of skilled care and some rehabilitative therapy. We coordinated with a caregiver to come in around those visits that were covered by Medicare, but she was receiving care pretty much daily for the first few weeks.
And what specifically were the caregivers assisting her with?
The activities of daily living, the eating, bathing, dressing, toileting, transferring. She was continent, but that is one of the ADLs.
Right.
In addition to that, they were making sure that she had groceries, that she was being fed. They were cooking, helping with cleaning, making sure she got to church when she was able to go.
Right. So they were fully assisting her.
Yes.
Got it. And were there any family members who lived nearby that could assist her?
Unfortunately, no. My sister lives in suburban Atlanta. I'm in New York City currently, and my aunt is about 2 hours away in Cincinnati.
Got it. So no one was really that close.
No, she had some very helpful neighbors. They did their best, but anybody that was family, far away.
Got it. So how often were you and your sister able to visit, given like you're a plane flight away, your sister's probably a couple hours drive?
Yeah, and when that happened, I was in Texas for a business meeting, which added a whole other layer. I was able to go back and see my mother in rehab and help coordinate everything. And my sister was able to come back and prepare her home and spend a week with her to make sure she was able to be there. After that, we were just able to come back for holiday visits, etc.
Got it. And was she open to having home care?
She was.
And how did that discussion go in the beginning?
Well, we had discussed it years before.
Okay.
And, she knew with us living far away that if she wanted to stay independent in her home, that was going to have to happen. But at the time, she knew when she got out of that facility, if she wanted to go home, the only way to go is if she had a caregiver.
So when the time actually came, she was well prepared mentally to have somebody step into her home to take care of her.
She was.
So oftentimes what we see when we introduce the concept to clients with their families, there's a lot of pushback. And it can be either because they're too proud, or they just honestly believe that they can take care of themselves.
Yeah.
So it can be very challenging sometimes to actually introduce the concept and actually get them to let someone assist them, especially with the private stuff like bathing and going to the bathroom.
Yes.
So how did it feel for you? Because you were, at the time, you said you were living in New York City when all this was going down.
Yes.
So what did that feel like?
It was a relief to know that when I left, after I was there to do what I could do to help her get situated, that there was going to be somebody nearby or in the home so that my sister and I were able to manage her care, even though we couldn't be there to do it. We had the care providers in place.
Right. And did it give you some level of comfort that you actually had a home care agency managing this process, so you didn't have to actually be there?
Yes, it was fantastic. The person came in, did an assessment, put together a plan of care, and we were in constant contact. We always knew what was going on.
And what was your overall experience with the home care agency, positive and negative?
Mostly positive. Again, very responsive. And the caregivers all did a fine job. There were times when there needed to be a personnel swap for various reasons, but there was never a gap in care.
And how's your mother doing now?
She's better. She's living independently. She's currently going through outpatient rehab, so it's an ongoing process.
Got it. And how does she feel about going through the process all over again?
Well, she's not stoked about it, but she knows that if she does, she probably will need another hip replacement. If she does have to have surgery, she's prepared to have a caregiver come into the home and assist.
And looking back, because you're a financial planner, you plan.
Yep.
How long before this actually happened, did you put this all in place?
At least 10 years.
And 10 years is a long time.
Yeah.
Was there like a catalyst that said, hey, you need to do this, you need to do it right now?
Yes. My oldest sister had passed away in 2012. My grandmother, who had spent time in a facility, assisted living, had passed in 2013. I was moving away. My mom was retiring. So she knew if she wanted to stay independent in her home as long as possible, that was going to require putting a plan in place.
Got it. And so how specifically did you plan for this financially?
So my mother's always been risk averse, so we made sure that her assets, her principal was protected, that she had enough income to sustain her life in retirement. We knew there would not be enough money to pay for care, so we invested in a long-term care insurance product.
Got it. And can you tell us a little bit about this product, what it covered, what it didn't cover?
Yes. It's a life insurance-based product with a long-term care rider. Once you meet that technical definition of needing long-term care, then the insurance carrier will pay a monthly benefit in cash. So my mother is then able to take that money and use it to pay a caregiver or receive care anywhere, whether it's residential or in her community.
Got it. And this isn't a typical policy. This is what's called a hybrid.
Yeah.
And so how does a hybrid differ from a traditional long-term care insurance policy?
Traditional long-term care insurance policies, while they're good to have, still a viable product, they are pure insurance. The product is there. You hope you don't need it, kind of like health insurance, car insurance. Generally, if you don't use it, it does not pay a death benefit. Sometimes you can put a rider on for a return of premium. Those are usually reimbursement products where you're sending in the receipts and being reimbursed for the approved cost of care. An indemnity product just gives you the monthly benefit in cash. Once you meet that medical definition of a need for care, after 90 days, you start receiving benefits.
And I think you mentioned that your mother used her inheritance to pay for the insurance.
Yes.
Are there other options out there to pay for long-term care insurance?
Yes. You can pay out of your savings, your lifestyle income. You can use inherited IRAs. You can use the rule of 72T that allows you to take a penalty-free distribution. Work with a tax professional if you do that. We can repurpose old life insurance contracts with cash value. Oftentimes we can reposition old annuity products, possibly mitigating gains if you're using the money for long-term care when it's paid out.
Got it. So there are a lot of other creative solutions out there other than just taking cash out of your bank account.
Correct.
Got it. That's great.
Yes.
And let's flip over to legal. How did you plan for this from a legal perspective?
Well, my mother had a decades-old estate plan that needed to be updated, and that was the catalyst for getting the attorney there to get all the documents in place. My sister is the medical power of attorney. I'm her financial power of attorney, and we confer with my mother. My mom's still in control of everything. She's part of, she's making the decisions, we're part of it, but there will come a point in time where we may have to make the decisions for her. If you do not have a legal plan in place, you're not able to do that.
So after all this, any key takeaways from your experience that you'd like to share with us?
Yes, have a plan. It's not even about the funding mechanism. It's about the plan. So if you have done the homework and you understand how your loved one wants to be cared for, where they want to receive care, who they want to receive it from, what is that going to look like for them? and what are those resources that are available in your community. And then once you come up with a plan, you can look, does the portfolio support this, or do we need to come up with an alternative plan to create a stream of income to offset the expense?
Got it. So this is my last question for you.
Yes.
Do you have a fun, funny, or fond moment with your mother you'd like to share?
Yeah, a fond moment was a few months after this whole ordeal took place for her, and she was able to be independent again. She and I were having a phone conversation. She was in tears. She said that, she was very thankful that my sister and I were able to so easily figure everything out, because if she had to have done that herself in the state that she was in, there's no possible way that she could have done it. So the fact that we had everything under control, we had a plan, it made it so much easier for my mom to focus on recovery and for us to just focus on managing her care.
That's great. That's great.
Yeah.
So I'm going to flip it to you.
Okay.
Thank you so much for sharing your story. Do you have any questions for me?
I do actually. Yes. Let me get to my list of questions. So for you, one of the first things I want to ask you is, when it comes to have a time that somebody needs care, right? And you're the one going into the home, helping make the decisions. How much easier does it make on the family when they do have a plan in place, when they have long-term care insurance? How does that impact the decision making?
Right. So for me, it's a big relief because it makes the decision-making process so much faster and easier for the whole family.
Yes.
Oftentimes, when there isn't any sort of long-term care insurance in place, the decision can either drag on, or the family can decide, hey, we just don't need home care,
Yeah.
even though they do, and they'll try to do it on their own, or they'll do minimal hours just to kind of get the minimal level of service to help their family member out, but not the amount that probably is needed from a safety or medical standpoint.
Got it. So if somebody does have the plan of care in place, obviously it eases the decision making. They don't have to contemplate what amount of care is given. They have the resources to do it. When that time comes, how can you lighten the burden for that family if they do have a policy?
Yeah, so what we like to say to our families is that it's not lighten the burden. We are completely taking the burden of managing the long-term care insurance policy away from them. So what we'll do from soup to nuts, we will call the insurance company with them and discuss their benefits. We'll activate the policy. We'll file claims with them. We'll follow up on claims with them. We'll make sure the elimination period is completely taken care of. And then after the elimination period is done, we'll step in the shoes of payment, which means that we will provide service, and then we will look to the insurance company to provide that payment as long as it covers the service provided.
Wonderful. And then let's talk about the actual managed care aspect. Of course, if people want to stay in the home and remain independent, they are going to need a caregiver at their side to make sure that they are able to perform their activities of daily living safely. Tell me about how you guys provide ongoing care if somebody has to segue into an assisted living or a skilled nursing facility or even a continuing care community.
Sure. And this happens oftentimes when a client family member, they need one-on-one care. So maybe they become a fall risk for a certain period of time. And the assisted living facility, they just don't have the resources or the team to give one-on-one care for extended hours. So that's really when it comes into play, when someone either becomes a fall risk at night, for example, or they're a fall risk all the time.
Yeah.
We can come in and literally just be with that person as many hours as needed.
Nice. And I know that when my mom was in the skilled rehab facility, the staff was amazing, the facility was wonderful, but they were limited in how much time they were able to spend actually helping her. People might want to shower more often or just have company or be able to be a little more mobile inside the facility. So having additional care helps.
Got it.
Thank you. And I think you have some more questions for me,
Yes,
don't you?
I do.
All
I
right.
do. Okay, so let's hop into those. So Christine, what are the different types of policies that are being written today?
Okay, there are primarily three types of long-term care insurance policies in the market. There's the traditional long-term care. That's an older product, been around for decades. It's pure insurance, just like car insurance or health insurance. It's there if you need it. You hope you don't, but it's still very valuable to have. Oftentimes, those don't pay a benefit if they're not used. Sometimes you can pay for a return of premium rider. The next product that came along were life insurance products with long-term care or chronic illness riders. That is when you buy the asset, the life insurance. You pay for an additional rider that allows you to trigger that benefit when you meet the definition of long-term care or a chronic illness, and that allows you to liquidate your death benefit in advance to pay for living care expenses. The newer products are called linked benefit hybrids. They're the best of both worlds. You do get a base policy of life insurance so that if you don't use the product, you can receive those funds back in the form of a death benefit. But it also has a pure insurance element, a continuation of benefits rider that can have inflation added to it, and you can create that policy to suit your needs. So you get the best of both worlds, the death benefit if you don't use it, plus the extension of benefits with inflation if you need it for care.
Got it. And what type of care is typically covered within a long-term care insurance policy?
So the technical definition of long-term care is the need for assistance with 2 activities of daily living or supervision for a cognitive impairment. That is the tax code trigger for anything that's filed as a long-term care product. The ADLs are eating, bathing, dressing, toileting, transferring, continence, or it can be just the cognitive impairment that requires supervision because you are no longer able to function without assistance.
Got it. And does it cover just home care or just assisted? Like what types of care? What's the gamut of it?
So that would cover if you need home health care, if you're in a situation where you may require adult daycare, assisted living, you could be in a continuing care community and you've met that medical trigger. If you have a policy, that would pay benefits, and also skilled nursing.
Got it. And does the policy typically cover more than just care?
Well, if you're having a caregiver come into the home, they're obviously going to help perform some of those instrumental activities of daily living that would require them to help with perhaps groceries, getting to doctor's appointments, transportation, things of that nature. The newer policies that are out there, they do have some pretty nice benefits as far as having a network of care providers and companies that can help facilitate a plan of care. They may even be able to help you find a care coordinator or provide that service so that you can trigger your benefits and then implement the plan of care with the network of resources that they provide.
Got it. So this is a part of the policy that a lot of policyholders don't know about or understand. So I'm going to ask this question.
Sure.
What is an elimination period?
The elimination period is the period of time where you're self-insuring, you're paying out of pocket. Usually with most products, it's 90 days. Oftentimes that 90 days may coordinate with that 100 days of skilled care. If you have a triggering event that would trigger your Medicare benefit for the 100 days, it will line up with that. Some products, if you're doing home health care, can dial it back to a 0-day elimination period.
Got it. So basically the policyholder's on the hook for those number of days, kind of like a deductible for car insurance.
That is correct. And any company that's going to pay a claim, they're going to want to see that that claim is going to last beyond the 90 days because that is the true definition of a long-term care event. 2 of 6 ADLs, cognitive impairment, expected to last beyond 90 days.
So here's another point that comes up specifically with elimination period. Calendar days versus actual days. What's the difference?
So calendar days, if you are in need of care consecutively for that 90 calendar days, even if you don't have a caregiver in the home every day, calendar days are going to be the fastest elimination period. Actual days or service days, it's going to take 90 days of actually having service provided for you to meet that elimination period. So that could take longer.
Right. So it doesn't matter so much if you're in an assisted living facility or a skilled nursing facility because you're not hopping in and out. You're there the whole time. It does matter if you have home care and you're not getting home care every day of the week.
That is correct.
Got it. Okay. Can you explain how the benefits work? Sometimes daily, monthly, lifetime. Mm-hmm. How does that work?
So when you're designing a product, often you're going to have a period of usually 2 to 7 years, depending on the insurance carrier. There's a carrier out there that still offers a lifetime benefit on their product. It's pretty rare these days. When you are getting monthly benefits, let's just say your monthly benefit that you're entitled to is $10,000. So you have access to that entire pool no matter what your daily costs of care are. When you have a daily benefit, you're going to be capped. So if your daily benefit's $500 a day, The day that you don't need care, you don't get the $500. The day that you do need care, maybe it's only $300, they'll reimburse that. One day you might need $700 of care. You're capped at the $500. Still not a bad policy to have, but there are limitations on how the daily benefits are paid.
Got it. And as far as lifetime benefit, how does that work?
So if you have a policy with a lifetime benefit, there are some older contracts out there that do have them. Not many of the newer companies offer them, but again, I mentioned there's one that does. That means as long as you are alive and in need of care and you are qualified annually to receive those benefits, they have to continue to pay.
Got it. Until that lifetime benefit is used up.
Until you pass away or are off claim and in no longer need of care.
Got it. Got it. This is another thing that comes up a lot.
Yes.
What is an inflation rider?
That is something you probably should add to your policy if you are in your 40s, 50s, even early 60s. The most popular inflation riders are 3% compound, 5% compound. There are some products that may offer market-driven or index-driven inflation. But the cost of care is going to rise as we get older, especially if you're 20, 30 years away from needing care. So it's important to add that to your policy.
Got it. Because typically someone's going to buy a policy in their 40s, 50s, 60s.
Yes.
And they won't need it till they're 70, 80, 90. So you have this gap of 20 to 30 years. And we all know that the cost of healthcare goes up a lot every year.
Yes, it does.
So by the time you actually need it, it's going to be a lot more than what you think it is today. So another thing that I wanted to ask you is it really that easy to just turn an insurance policy on? How do you actually qualify to activate the policy?
I mentioned there's a tax code trigger for everything that's considered long-term care. Even with chronic illness riders on insurance, their qualifications are similar. You have a need for assistance with 2 of 6 activities of daily living or a cognitive impairment, and the need for care is expected to last beyond 90 days. At that point, you're going to need somebody who's a licensed clinical social worker or medical professional that can prescribe a plan of care and provide any necessary documentation, whether it's test results or physician's notes, doctor's records, to facilitate that claim so that you trigger your benefits.
Right. So just because you're 85 years old, you can't trigger it.
Correct. Or mom's a little forgetful. She got lost on the way home. No, you're going to have substantiary medical evidence so that you can prove to the insurance company that you are in need of those benefits.
Right. So for a physical impairment, it's probably pretty obvious, right?
Yeah.
2 of the 6 ADLs.
Yes.
Cognitive impairment, you're actually going to need a doctor's diagnosis, a physician's diagnosis that you have Alzheimer's or dementia.
Correct. So you're going to there's some cognitive tests that can be performed, and probably a neurologist is going to be involved as well, and some testing will take place. And also you're going to have some input from your primary care physician too.
Got it. Well, I don't have anything else. Do you have anything else for me?
I do. One thing I failed to mention when we were talking about insurance products, there are some other great alternatives out there. We have a growing market for short-term care insurance options. That can be for older clients or clients who may not be able to qualify for the long-term care insurance products that are out there. There are some interesting annuity products as well. There are a handful of carriers out there that offer products that will give you some leverage if you need care by having it in an annuity wrapper. Oftentimes we can take old annuities and put them in these newer products and possibly mitigate any tax liability there could be when you start to spend that money. If you spend it on long-term care, oftentimes those dollars can be tax-free. There are nice death benefits available to your beneficiaries if you don't use them, like with the newer insurance products. The annuity products can be a little bit easier for people to get if underwriting is a little more of a struggle when you're trying to buy those 3 typical insurance products that we discussed earlier.
So it's not necessarily a long-term care insurance policy. It's more of a planning policy. You can use it for long-term care insurance. You can use it for other things.
Yes.
Got it. Okay.
And a lot of times, as I mentioned, we can get creative and work inside of a person's portfolio and just reposition some assets so that we're able to create that income stream to offset the cost of care without disrupting their retirement lifestyle. Because I think that's what people find so scary when they look at an illustration and think, wow, that's a lot of money. What if I don't need it? Well, now we have ways to take care of that so there's no loss of the dollars and can potentially put them in a better tax situation by having a plan.
Yeah, I think that's the biggest reason people don't buy the traditional long-term care insurance today is because people, in their minds, they all think well, I don't think I'm going to need it. I'm just going to die.
Yeah. Or sometimes the advisor will say, hey, we can just do better than this. Let's keep your money in the market. When my mom fell, I thought I had another 10 years before she became a fall risk based on our family experience. And that wasn't the case. And now we feel comfortable knowing that we've got the plan in place to keep my mom safe at home, and there's money to do it without disrupting her retirement assets.
I think the other thing that people don't really think about is, yeah, you might have the money, but do you have it sitting in cash, right?
Right.
And so what people also don't really realize is it's expensive, right?
Yeah.
It can, literally be a lot of money coming out of your bank account every month,
Yes.
continuously. And so the tax implications of, hey, I got to have to start liquidating assets, right?
Yeah.
I've been sitting on these, stocks for years, and
Yes.
now I have to start selling them. I've got tax issues that I have to
Yes.
deal with. That's another thing that people don't necessarily think about. They think, oh, I have the money, but do you have the cash sitting there to actually pay for this every month?
Right. And, you can leverage up that cash by simply repositioning it into a product that's going to give you a bigger payout when you have a long-term care event that triggers it. And you can also look at some great tools out there where you can project what the cost of care is going to look like in your region. It's going to be different in every part of the country. Here in New York, it's very expensive. One of the most expensive places to receive care. And you look at those other high cost of living markets where the cost of labor is expensive because long-term care is a labor cost. Okay?
100% labor.
And it is. It is.
100% labor.
It's a labor of love, but it's not free if you're paying a caregiver. So it does make sense to say, hey, how can I reposition these assets in a way that makes sense to where we're taking the heat off the portfolio? You look at times when the market was down, most recently 2008, 2020 during COVID. Even now, while we're experiencing some turbulence in the Middle East, the market's down. If you have to take money out when the market's down, or you do have a highly concentrated stock position or other assets where there might be tax consequences, or perhaps I see a lot of people in this region that are wealthy, but they are not liquid. Okay, so if they've got a lot of money in businesses and real estate, things of that nature that are not easily liquidated when the time comes to pay for care, and oftentimes it's a surprise. You don't get to pick the day that it happens.
No, you don't.
Like I said, 11th hour crisis in many, many cases. It's nice to know that you've protected the portfolio, you've put a hedge against it by having a separate stream of income available to you to offset the expense. And I cannot tell you how much easier it makes the whole experience for the person who needs care and then the family members that have to be involved in putting the plan in place.
No, you mentioned a good point, because I do have a client who has property, right?
Yes.
But he says, look, I'm on a limited cash income.
Yeah.
And it can be challenging at
Yes.
times. And the other point you brought up, which I thought was really interesting, is that you don't get to pick the time,
No.
right? And so you could have very volatile markets, and the nice thing about having insurance is it's a kind of immune to that, right? Whether
Yes.
the market's up or down, you're kind of guaranteed a stream of income,
Yeah.
regardless.
That is true. And most of the products are fixed that are out there. I mentioned there are some that have a little upside in the market, but they do have some baseline guarantees with them so that your benefits will lock in at a certain point. So that at least you can count on that in the future, knowing that this is going to be here to get the job done for me should I ever need the money to pay for care.
Got it. Any other topics you want to cover?
No, I think we've covered quite a bit today, actually.
Okay.
Yeah.
Well, look, I'd like to really thank you for coming. This has been really a pleasure.
Yeah.
We're so grateful to all of you who are watching, sending out positive vibes. Thank you so much.